U.S. stocks trimmed gains and fell in the final hour of trading on Tuesday to close a second straight session in the red. Investors received new inflation data out of Washington that showed prices in March accelerated to a new 40-year high, as if we didn't already know. The Bureau of Labor reported the CPI index rose 8.5% in March compared to the same month last year. Hot, hot, hot. As a result, the S&P 500 retreated, the Dow Jones Industrial Average gave up, and the Nasdaq Composite faltered. Meanwhile, the 10-year yield remained above 2.7%, the highest level since January of 2019. Although today's inflation number hit a four-decade high, there was a sigh of relief as some components of core inflation weakened. But the bigger concern is really how entrenched inflation has become as Americans continue to worry about rising prices. Just ask yourself, do you plan to cut back on spending? The focus now will be on what the Federal Reserve is going to do in the upcoming meetings. Right now, in my opinion, I believe the market is discounting a 50 basis point hike. But it's still a coin toss as to whether the Fed pushes the economy into recession. So, what do the charts show? Two charts today, beginning with the 3-year weekly chart on the spiders, the SPY, and we're looking at the 3-year weekly simply as a continuation of the weekend's update. As we were talking about, we had the top at that point there, we came on down, bottomed and based, and we moved back up. We hit that resistance, and we're coming on back down here. But as you'll see in the oscillators, this is one of my favorite formations, as because it gives the investor a second chance. I'll show you what I mean. Looking at volume, not too much, but here in the MAC, again, this is the key. Came on down here. Now, from this point, the fast line accelerated on the down, but hit that bottom right here. That separation between the fast line and the slow line meant volatility, which we're going through. Now, the fast line came up near the slow line, but got reflected back down. Now again, this is the formation that I love to see. It gives the investor a second chance to get into the market. At least that's my opinion. This reflection back down here is a little bit of weakening, but most of the strengthening has occurred, and the fast line is almost strong enough to move up and through that zero line and up and through the slow line. So we're getting this reflection back down here. It may continue for a day or two, maybe a little bit longer, but I think certainly by next week, the probability is that the fast line will turn on up and slice through that zero line and the slow line. But let's close in on the daily chart and look at it more closely. And so now switching over to the 6-month daily chart on the spiders, as you can see, we got up to this level here, which was slightly above here. That's where I was expecting the resistance, but we popped up and through there, but resistance we still got, and it got reflected down. The prices got reflected back down here, so we sliced through the 20 and the 50 EMA. Not a big deal. We're here at 438.29. I imagine we're going to stay above that 420, I hope. I think that's the probability. We may even stay above the 430, but it doesn't really matter. Looking for the move on down here, then to bottom and base and go sideways and then make its move on up. Moving down here into volume. Volume is starting to decline. I'd like to see it decline even further, but it's not all that significantly important. Moving here into the MAC. Again, the fast line, you can see here it rolled over, sliced through the slow line, moving on down, still above zero. There's still some strength. It may continue below that zero line. The slow line may also continue below the zero line. Still not really all that negative. But we move down here, look for that bottoming and basing, and then the move on up. And I think the histogram is going to show you that relatively soon, just like we saw here and perhaps even here. These are not that great of examples, but basically that's what you're looking for, is some sort of movement here where the decline starts to subside and then you start getting an incline and then we move on up. Look for the price rate of change also to bottom and base here. There's a pretty good difference between the fast line and the slow line, but I imagined something like this. It came on down real hard, but it's going to bottom and base and then move on up. So look for that kind of a formation. Here, relative strength still looks pretty good. We've got some movement all the way from this negative level here all the way up through there. So I'm looking for this to turn and move head up to that 50 and above soon enough. Same thing here with the stochastics, and you can see that the Williams already hit bottom. It's going to do a little bit of sawtoothing down here like it did at that point, at this point here, and then this point here. And then watch for the Williams to be one of the first oscillators to start heading on up, and that's going to give you a key on what the other oscillators are going to do as well. Back up here to the price chart. One last look. In my humble opinion, declining volume with a bottom basing sideways move and then on up, and hopefully we'll have the strength this time to move on through. The weekly chart wants to take over from the daily and the monthly, so that's the key. Watch that weekly chart and the MAC on that weekly chart move up, the fast line move up and through the slow line, and I think we'll be on our way. And for today, that's ChewDog Charts. Thank you.